What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down something very important that Elon Musk said that will affect Tesla and the overall market. I'm going to talk about why on earth what he's saying in terms of what the Fed is doing is going to be huge for 2023 and beyond when it comes to the recession and other big factors out there. Now, before I break anything down about what Elon Musk is warning all Tesla investors and all investors in the stock market and everyone out there about, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below in its description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any could be a free Tesla share. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. This is your last chance to sign up. Now, looking at Tesla, guys, I want to note something very important. Tesla's notorious for having a relatively high PE ratio because Tesla's a stock that has a very, very high share price relative to its earnings per share. And earnings per share is calculated by dividing the net profits divided by the total amount of their outstanding shares. So we could see that having this very, very high share price, these types of stocks, especially if they're in the communications or tech sectors, they're actually going to take big hits during these recessions. Now, it's quite clear that Tesla has more than a 2.0 beta. So if the stock market's down like 1%, Tesla tends to be down over 2%. I'm saying this because when you look at the S&P 500 or the SPY, we are down pretty hard compared to our all-time high, and Tesla's notorious for dropping even harder. And that's going to be very important for the future going forward. I'm not saying that Tesla's going to just crash to zero. I don't see that happening at all. But I am going to say that in the future, there is going to likely be more pain for the markets, especially if the markets make new lows again. That's still very possible. And there are many catalysts for that, such as the earnings recession, global tensions. I'm sure you guys know what's going on around the world, supply chain constraints, and the list goes on. So the reason why I'm still talking about supply chain constraints is the fact that during this recession, we could see a lot of big hits being taken by production mechanisms for different companies, not to mention the fact that demand is going to slow down, especially for the EV sector and for Tesla. So there's a risk that even if Tesla has a high amount of production and etc., their deliveries may take a very, very big hit. I'm not saying that it's confirmed or I'm saying that I'm guaranteeing it, but I am saying that it's very likely to happen. So anyways, this basically implies that there's going to be pain for 2023 and the stock market is likely going to take a big hit. But I want to give you guys some more context about this. Now, it's quite clear the Fed is going to be raising rates again in just a couple of days on December 14th. There's a 77% chance we get a 50 basis point rate hike and a 23% chance we get a 75 basis point rate hike. The market is not even fully priced in 75 basis points for this time after the way Jerome Powell was speaking. But Elon Musk said something very interesting. He mentioned that if the Fed raises rates again next week, the recession will be greatly amplified. So notice something. He's not saying if the Fed gives us 50 basis points, if the Fed gives us 75 basis points, if they give us 100 basis points, he's not saying any specific number. He's simply stating if there's any rate hike, if the Fed raises rates again, anything, 25 basis points, 50 basis points, 75 basis points, the recession will be greatly amplified. So he's taking the same path that Cathie Wood was also taking, and that is them stating that the Fed is being too aggressive too fast. They believe that there's going to be a risk of deflation because they think that inflation is going to plummet a lot quicker than some people are anticipating. And then the Fed is going to be scrambling to pivot not just faster, but then start to ease up much quicker than expected. At least that's what Elon Musk and Cathie Wood would be thinking. However, they also are not just talking about everything being okay in that manner. They're also implying that the Fed being this aggressive is going to cause a massive recession, which is very contrary to what mainstream outlets are telling us. The mainstream outlets are acting like, oh, there's no recession, it's not confirmed, this and that. Well, Elon Musk is telling you guys, yeah, it's going to be really bad. All right. And I find myself agreeing with him. I do believe there's going to be a very tough recession. And once again, that's the opposite of what Jerome Powell said. Jerome Powell said that it's very possible for us to get a soft landing. He said it again, and that's what the market pumped. We saw SPY reach 410. So it really goes back and forth. But just to give you guys more context, so we got a 25 basis point rate hike in March, then a 50 in May. And since then, we've been getting 75 after 75 after 75. So the Fed is planning, at least as of right now, at the time I'm recording this, a 50 basis point hike. But there are some questions about it, saying that PPI was relatively high, not to mention the fact that CPI may be high too. And this is why investors are very concerned. Now, the total federal funds rate or the terminal rate is likely going to be higher than anticipated too. This is part of the reason why the market is very nervous. Now, there is one more thing I wanted to talk about, and that is looking at this chart. When the Fed pivots historically, that's when the market crash happens. But I do see a big difference here. And I don't want to say that this is what's going to happen, but I do believe it's worth noting that it is a possibility. The Fed is going to pivot in 2023, most likely. And what is a pivot? This means that they reverse the rate hikes. They're not going to do it immediately. All right, it's going to take a while, but it most likely will happen in 2023. What the Fed is going to do first is they're going to slow down the rate at which they're raising rates. So instead of giving us 75 basis points, we're going to get like 50, then 25, then it's going to stay at 0. So they're not going to raise rates anymore. They're just going to keep it the same rate. And then finally, they're going to start decreasing it. And what tends to happen is when they start decreasing the rates, what's essentially happening is the effects of the higher interest rates hurt the economy much later than the initial time in which they are raised. And then the real pain starts by the time they're getting ready to pivot. That's why the real pain, the real effects of this recession, and I believe we're already in one. I know that mainstream outlets may disagree with me, but I believe we're basically in one and it's going to get worse. My point is, the real pain is happening next year, 2023. All right, it's going to get very tough. And my heart goes out to everyone. Unemployment in America, the unemployment rate is going to start going up. It's going to be tougher for everyone. There's going to be lots of pain. It's going to become more expensive to borrow money, especially with inflation still soaring the way it is. It's going to be tough. So the real question now is, how will this affect Tesla? Because we have another rate hike coming on the 14th of December, right after the CPI report. And my answer to that is, when you look at SPY, historically the bear markets last about 14 months on average, with an average drop of about 32%. Now, when we look at this, did we get the 32% drop yet? We haven't even come close to that. In fact, we're not even close to it. The true drop is likely going to continue to come going into 2023. It may last many months. And this time, I wouldn't be surprised if we see the 340s again. We could even go as low as the 320s. I mean, it's just very possible. I know people don't like to hear that, but I'm just warning everyone, it's very possible. We also have a gap pretty down there. We have some gaps in like the 350s. I have to use different time frames to show them to you, but there are actually a lot of gaps down there on SPY. So I do expect to start filling those gaps as the time goes on. And finally, like I mentioned in my previous video, the 10-year treasury yield is starting to actually switch directions. This is often a very bearish indicator for the markets. And I studied this and I essentially found that when this reverses course in its direction in this very strong manner and it starts pushing, this is either an immediate result of the market starting to actually enter a bear rally or a bull rally, right? When it switches courses. Or sometimes it's like 1 to 1.5 weeks early. So this is basically telling us that if this yield continues to push up and goes for this gap fill, goes up and up and up like this, the stock market is either going to start crashing like immediately or in the next like week or two, right? Very bearish indicator that's coming out. And the reason why I'm talking about all these like potential bearish outcomes is I'm not saying it has to happen immediately, but I am saying that there's likely going to be more pain even for a company like Tesla. So for Tesla, how low could this thing go? In fact, I don't really want to talk about the true bottom, but I do believe that if this thing does not hold 166, the next psychological level is going to be about that 150 support zone. So please be very careful. On top of that, what isn't really good for Tesla is This thing's already pretty down there, and SPY is just barely starting to drop. The market's just barely starting to take a big hit. When you look at the QQQ right here, notice how this thing has, on a smaller time frame, it has a pretty big gap down there. Where's the gap? I think I have to use the daily chart for it. But there's a pretty big gap down there. The QQQ is going to be taking a big hit relatively soon. This is going to be accompanied by Apple and most likely Tesla as well taking hits too. So down here, the QQQ is going to return to the 260s, maybe even lower than that. And there is just, like I said, more blood to come in this market over the next couple of months. I have to be honest with everyone. So as a Tesla investor, like Elon Musk just warned everyone, it's going to get tough. The earnings are not going to be as great. And I believe once the Fed is done raising the rates, and once we start to see signs of inflation cooling, that's only half of this bear market. The second half is going to be more fixated on earnings. And I believe that for 2023, businesses, entrepreneurs, investors, they're going to be more fixated and more focused on the earnings, less focused on the Fed. So please be prepared for this, all right? That's the reason why I'm talking about what Elon Musk is warning everyone about. Even though I haven't really heard him tweet as much about Twitter as before, he is still giving us some very important hints about his belief about the state of the economy. Now, do I think Elon Musk is right about this? I believe that it really depends on how you interpret his words. He's saying the recession will be greatly amplified. He's implying there's going to be a lot of pain. Now, will the pain be way worse because of this rate hike? It is very possible. But the bottom line is his point, in my opinion, is very correct. Because Jerome Powell was telling you, hey, there's probably going to be a soft landing. No worries. That's not the truth. The landing's going to be hard. The Fed has never truly given us a soft landing throughout history. All right. So please be ready. I'm not just talking about the stock market. I'm talking about your real estate assets. I'm talking about your job that you probably have or you don't have. Anything like that. Okay. You have to be prepared for this. Things are going to get very tight and very tough for 2023. And like I said before, I want the best for everyone. You have to stay strong and never give up no matter how hard life becomes. Because I know what could happen. I know what it's like to struggle. I know what it's like to have parents that struggle. I know what it's like to go through very hard times in your life. I know what it's like to lose people. Don't ever quit, guys. That's what I have for this video. Please be ready. Elon Musk is warning everyone about this. And like I said before, there's likely going to be more downside for the QQQ, for SPY, the entire market, and for Tesla stock as a whole. Could we bounce next week because of CPI and the FOMC? Sure, it is still very possible, but it doesn't really matter as much, in my opinion, because we are going to still see the market take a hit, even going into 2023. Now, going back to my point, the last thing I'm going to say is when it comes to the Fed pivots, one point I forgot to mention is the fact that history does not have to repeat itself exactly because the market is super forward looking. Remember, the market had that big crash approaching the month of June, between May and June. And notice how right here, when the market actually got to 75 basis points, it wasn't the 75 basis point hike, excuse me, it wasn't until June 16th. So the market has a tendency of crashing before the big events happen. It prices things and it's very future looking. So there is a chance the crash will happen before the Fed pivots going into next year, and we don't actually crash as hard during this time because the market's already down so hard. There's also a possibility that the true crash actually happens during the or after the Fed pivot as well. So please be ready. The bottom line is the true bottom, in my opinion, hasn't come in the markets. I do believe we're going to see either the previous lows be retested or new lows to come. So, like I said, be ready, guys. It's going to really affect Tesla over the next few months. For the super short term, maybe Tesla could bounce a little more. It is still a little bit possible. But as I mentioned earlier, to me personally, I still see more downside. So it is going to affect Tesla. It's going to affect every stock out there or the large majority of stocks out there. Be ready, guys. Thank you for listening. Enjoy the rest of your weekends, and I'll see you guys in the next one. Tesla to the moon, because the long-term future is still very bright. I'm still very bullish despite what I just said about Tesla. I'm still super bullish for the super long term. I think that when Tesla comes down, it's going to be a very good buying opportunity. And the Cybertruck, the new semi truck, all these innovations, the full self-driving technology, the humanoid robot, Optimus, I'm still very bullish because of all these things. So I still think this is a very good opportunity for the long term. So I just wanted to make that clear. I'm still super bullish on Tesla. Just for 2023, the start of it, the first quarter or two, there will still be some pain for the whole market. So please be prepared. Anyways, thank you for listening. Tesla to the moon, and peace out.